All right, suddenly technology stocks look vulnerable here. And in fact, the inability to hold on to early gains this morning, and of course, the mounting questions about the AI revolution have sparked a sort of sell the rip kind of phase rather than the usual buy the dip. Of course, I'm still in a camp that you want to own select tech names big time, but there will, of course, be periodic pauses and pullbacks. That's just par for the course in any market. But that said, it's a lot easier when XLK is consolidating, which it's doing right now, above the 50-day moving average. This is fine. We want to see that. Of course, nobody thought the tech rally was going to stall, even begin to drift lower for 5 months back in late October, if you can see the red arrow. So right now, there are millions of moving parts to this tech trade, folks, and they're all interconnected. And so we've got the right man to have this discussion right now, Constellation Research founder Ray Wang. And Ray, let's just start with the big story that seems to have sort of triggered this pressure here. Yesterday, Meta said they're going to sell compute. Here's what's interesting. A lot of observations. I thought this one from Vector, calling BS, was the best. They're saying, okay, this is the same company that in March paid Nebius $27 billion for 5 years of capacity beginning next year. In April, had a deal they expanded with CoreWeave for $21 billion for compute. And June 18th, signed a deal with Crusoe. And on June 28th, Google actually had to ration their access to Gemini. So from not having enough compute to having excess compute, I'm not buying it, and I think the street is taking it too seriously so far.
I don't know. Is Meta a new Neo cloud? I mean, this could be their move, right? But actually what's going on here is, look, there's a lot of compute capacity. They're about to put stuff online. And in the middle of building out your AI model and getting everyone else to use it, you might as well make some money renting out the farm while you can. And I think that's what they're doing at the moment. Option one, AI models on Meta. Option two, brand new raw compute. The problem is no one's picking up their models. It's not like their models are on fire. They do perform, but they're the only ones using it. And with all the excess capacity that they've put into place, you know, Santosh and Daniel and Dina, they've pretty much decided, hey, let's get some money out of this while we can.
To that point, though, the metaverse, Reality Labs, I did read one article somewhere that says that this still could end up being a barn burner. They're not going to cut back on investing anywhere else, are they?
No, they're not. And if you saw what they've done is they've actually taken out a lot of workers over the last 6 months. I think thousands of folks have been let go. They've hired some high-powered talent. That talent hasn't worked together. It's not exactly the dream team of talent, but they'll get there at some point. The models are good. They own the data. And of course, they've got a cash cow coming through the ad machine. So, you know, we can let them futz around for a little bit more, but at the end of the day, they've got a lot of compute that they can offer everyone else.
Alex Karp yesterday slamming AI. It put a damper on those stocks. It helped his stock out, but it actually kind of added to, I think, the overall feeling of uneasiness with a lot of people when it comes to Anthropic or OpenAI. Just your thoughts on what he had to say and the validity of it all.
Well, Alex doesn't mince words. He's never done that. And I think it's mad that AI model companies have oversold on the promise of AI. And that is true, right? And the token model is really messed up. It's expensive. It doesn't have any business value. And what he's worried about is all these companies have been outsourcing their data, giving it away. There's a lack of ROI, and they're outsourcing their control in terms of being able to use the model. We believe that the future of companies is really the data that they have. You're going to make money on data 5 different ways. And if you don't protect that data and invest in that data infrastructure, you don't get to play. So Alex is absolutely right. But of course, you know, when Palantir comes into a company, they take all the data, they use that data to build their models. So I'm not exactly sure if he's not being hypocritical at all there.
I want to stick with this for a moment because I started the show talking about OpenAI. Maybe offering and suggesting that the U.S. government take a 5% stake. Just how much trouble is OpenAI in right now? And do you like that idea?
Well, they've got to raise a lot of cash. And part of the problem is Elon went first. He set the valuations. Then he went and got the bonds. And, you know, he dictates that. Anthropic is ahead of them in the enterprise space. But they are hiring a lot of good talent. We're seeing a lot of great enterprise folks leave Microsoft, ServiceNow, Salesforce, head over there. But the question is the government a PE firm? I mean, or is this a way to combat socialism? What's going on here? I mean, I'm a free market capitalist, and this is completely wrong. We shouldn't be meddling in markets like this. But I guess, you know, they're looking for having the government getting involved, like Intel's involved with the government.
Well, Intel is a name I think you all know. Now, they've done pretty good with this government stake.
They have, right? And that's part of the thing. Will the government be PE firm and make that investment, or they not? Will they not? Because the valuation is at 860 billion, I believe,
Right.
For the valuation they want the government to come in at 5%.
Right. Well, no, yeah. I mean, I think it's something that's critical from an industry point of view, but company by company, I don't know that the U.S. American public needs to own OpenAI for any national security reasons. Let me ask you about memory stocks. They're starting to slip here big time. It always seems to start in Korea, right? Those investors are spooked. We know it's a whole different mindset there. They've got stock market mania, maybe even greater than we had it at the peak of the dot-com bubble. But what about the fundamentals? Do the fundamentals sort of make you want to buy more here? Is this oversold so far?
Well, the Kospi folks do get pretty crazy and excited when they take a trend, they take it all the way. I think they hit the peak. I'd wait for the dip. I think there's still a memory glut, a memory shortage before we get to a memory glut. We are 2 years away from memory being, at a point where demand and supply are equalized. And you saw Micron shares. I mean, they're up 240%. AMD tripled. Intel up 216%. You have to choose which stocks. But I think when you're looking at SK Hynix, you're looking at, Samsung, and you're looking at Micron. I mean, there's still a lot more demand, and they're getting a lot of margin for every chip.
One article I read said that the folks in Korea, investors, are actually looking beyond memory now, and that's one of the reasons for the turmoil. They're taking profits and they're looking for other areas. They're going to be big in robots. I'm seeing about like 30% of the robot components will be made there. I love the way robot stocks are acting this week. In fact, today, Axios had a great link in there to a Barclays report. And everyone should read it about humanoid robots. They're going to go from $3 billion, according to this report, to $200 billion by 2035. That's a lot of money, a lot of opportunity. The question is it too early, in your opinion, to start investing?
Definitely not too early. Our estimates, it's 107 billion. I know the 200 billion number is a high number, but we've already got Tesla's out there, Optimus. We've got Hyundai's acquisition of Boston Dynamics. And of course, you've got the stuff going on Tech Walker's, BUT Tech Walker's kind of Walker S, the Chinese vendors that's out there. There are other places to play. You can do it Agility, Figure, Intuitive, and Procept. These are companies that are public. And of course, industrial, Figure's not public yet, but industrial, you got Fanuc, Symbiotic, and Rockwell Automation.
Right.
If you want to get in early. These are companies that have been there for a while, but of course they're taking it out. The humanoid piece is the hot, flashy part, but it's the industrial robots is where you're going to see a lot of the demand.
Yeah, and then the upgrade of Ambarella this week also played a big role. So SYM, ROK, just a couple of symbols, and CCXI. Right now, that's a SPAC, and I'm not sure what the ticker is going to be once they merge Agility in there. I got 30 seconds. You're still okay with these photonic names? They're coming down pretty quickly. Again, we'll pull up a chart of light, Lumentum, just to underscore these big chunks on the downside. If you look at it in a 1 year to 2 year period, they're almost microscopic, so maybe overdue.
Never enough time with you. Lumentum, definitely the optical and laser components are awesome. Coherent's got the transceivers that you need for AI clusters. Corning, they're everything. They're in the optical cables. And Ciena, they're the light speed optical signals. That's what's driving the market. You've got to move fast in AI. You got to connect all these devices. You can't do it with cable.
You're right. Never enough time, Ray, but I love our conversations, man. Thank you very much. Talk to you again real soon.
Happy 4th.
All right, buddy.